I get this question a lot. Quote, is it smarter to invest in real estate or invest in stocks? My name is Jim. I'm a Canadian that owns millions of dollars in US stocks and also millions of dollars in US real estate. So I'm here to give you the answer. A simple question with a complicated answer. I'll just make it short. The short answer is yes. The longer answer is it depends. Both stocks and real estate are businesses. They're both businesses. Stocks are not just tickers that move up and down in price. They all represent business. A rental property is also a business. If you look at an apartment building, it has an income statement with revenue, expenses, profit, loss. People mitigate their risk with stocks by grouping them together. So you can buy, for example, in a passive index ETF, hundreds, if not thousands of stocks in a single investment. Over the long term, and I'm not talking about 2 months, 6 months, 1 year, or even 5 years, I'm talking about decades, the return on something like a passive index ETF is like 8 to 10% a year. It's not going to be the same every year. It'll be a very lumpy ride. This return is called total return. It is split into cash flow, dividends, and appreciation. For something like the United States, the dividends is approximately 1 to 2% a year, and the rest is appreciation. Let's look at real estate. This is from the National Bureau of Economic Research. It looked at rental properties over 3 decades. It's called total returns to single-family rentals. Instead of dividends, they looked at cash flow. Appreciation remained the same. What is the total return of single-family rentals? Looking at some of the largest cities in America, you can see the total return on the right-hand side to be very similar to stocks over the long term. The difference is where the return comes from. For a long period of time, for stocks, 1 to 2% from cash flow, the rest from appreciation. You can see, for example, Pittsburgh, number 1 on the list, only 3.5% is from appreciation, 6% is from cash flow. Looking at something like New York, which is right below me here, the cash flow is about 1.5%, and the return from appreciation is approximately 4.6%. For the investor, it depends on whether or not they can find a deal in these areas, and whether or not it's comparable to the stock market. And third, whether they want the return from cash flow or appreciation. You're not going to get high amounts of appreciation and high amounts of cash flow together, unless the market's going through something crazy like 73, 74, stagflation, oil embargo, savings and loan crisis, or the credit crisis. Multifamily is going to be similar because the market is relatively efficient. If there are huge returns in one area, say in multifamily, the market's going to move in that direction, destroy any alpha or advantage. So is it smarter to invest in real estate or invest in stocks? The answer is if you can find a deal. If you can't find a deal or you don't want to, then a passive index ETF representing all businesses or a real estate investment trust focusing on only real estate may be your better bet. Learn the lessons about money that your friends and family just don't know. Download my free newsletter linked off the bio. Good luck. Take care.